Hi, this is a walkthrough of task 5 of the second AAT sample assessment for the advanced synoptic unit. So just going to share my screen. And then we're going to go to the AAT paper. Right, so this task is based on the workplace new place. Yeah. Mo Hussein has asked you to help update the budget. Right, so this task, by the way, is all computer marked and it is predominantly about management. So the MAC unit. The data below is the current budgeted performance. So this data here, the current budgeted performance of new place for the 6 months ending 31st December X8. The original budget was for 10,000 units. Original selling price £165, original cost £125. Mo has suggested the following changes. Excuse me. So sales volume up by 10%, prices up by 5%. It's interesting. Usually when you sell more, you have to put the price down, but they're both going up. Complete the following table to include the suggested changes. Show your answers to the nearest whole pound. Right, so sales revenue. So it was 10,000. It's going up 10%, so that's now 11,000. And the original price, 165, is going up by 5%. So that's £173.25 per unit. So if I multiply that by the 11,000 units, I get 1905750. Right, cost of goods for resale. So it doesn't look like there's any change to the cost. It's per unit. But remember, my volume has increased to 11,000 units. So let's do £125 times the 11,000 units, which gives me 1375000. Gross profit, therefore, is just the sales take away the cost of sales. So let's do that. So that gives me 530750. Right, all the fixed overheads are there for me. So now I'm just going to subtract those overheads from the gross profit, which gives me 205750. How many marks was that? Oh, only 4. Right, with increased production, so we've gone from 10 to 11,000 units, Mo has asked you to help prepare a capital investment appraisal for a new item of machinery for the manufacturing department. The machinery will have an initial cost of £165,000 and is expected to be sold for scrap in year 3 for £30,000. And he's given us profit and loss and depreciation. So it's always handy to clock what sort of question it is. So this is a long-term investment or a long-term decisions question. So I know that all my methods, my payback, my net present value, and my internal rate of return, all 3 of those methods I learned in management all use cash flows, not the profit or loss. I also know that depreciation is a non-cash expense, and therefore if my actual profit figure is 64,000, I need to add back, God, that's a huge depreciation figure, isn't it? 50,090 of depreciation, which gives me a cash flow it'd be handy if I had another column here. My cash flow for year 1, so 64,000, add 50,090 is 114,090 because depreciation is a non-cash expense. So I can hold it like that. So I've just worked out year 1's cash flow. Look, it's even told me I need the cash flow. So 114,090 for the first one. Right, year 2, I'm going to do 63,400 plus 48,350. So that is 111,750. And then for year 3, 65,800 plus 36,560 gives me 102,360. And then hopefully you remember when you've got a discount factor, you just multiply the cash flow by the discount factor to get the discounted cash flow. So 114,090 times 0.893. So 101,882. Remember it told me here, do it to the nearest whole number. Then I'm doing 111,750 multiplied by 0.797. So this one is 89065 rounded to the nearest whole number. And then 102,360 times 0.712 is 72880. Right. Calculate the net present value of the machinery. So to do a net present value, that's where you basically add up all your discounted cash flows. Remembering the first one is a negative because it's money flowing out. And then all of the others are the money flowing in adjusted to today's values. All right, so I've just done minus 165,000, add, which gives me a figure in my calculator of, oh, wait a minute, I've gone wrong somewhere. I've got the answers here, I've just realised I've gone wrong. Whoop. Right, so where have I gone wrong? I know what it is. It's because I forgot about this being sold for scrap in year 3. So in year 3, my cash flow should be 132,360 times 0.712. Sorry about that. So that gives me a discounted cash flow of 94240. Let's try again. So minus 165,000 plus 101,882 plus 89065 plus 94240. Yeah, that's right. So the correct answer is 120187. Right, now if incidentally, if you had done the same as me and done year 3 wrong, yes, you would have lost some marks here out of the 6. I don't know how many exactly, because there's more than 6 boxes to fill in, but you would have lost some marks there, admittedly. But then you would have got this mark correct because you would have done the right thing with the wrong number. All right, but obviously it's better we've now corrected it. Right, then this bit at the end says, when looking at net present cost, not value, cost. Right, so normally we've been used to seeing net present value. So with net present value, you accept if it's positive, because obviously the higher the better. You're looking at money flowing into the business. If you're dealing with net present cost, obviously the higher, the worse it is, because you're now dealing with a cost. So when looking at net present cost, the better project would be the one with the lowest net present cost. And that's the end of that task. So sorry about that little slip up, but we got there in the end.